Hey everybody, welcome back to my channel. Today's video, we're going to chat a little bit about divergence. I'm not going to go super in depth on it because you can really go overboard with this and make it really complex. And like everything in currency trading, I just keep everything super simple. And that's how I trade. That's how I've always traded. It's how I learned. And yeah, I stick to the basics. I keep things simple. That's my style. If you want to know more about it, I do go over more about it in my study guide. And of course, there are tons of websites out there that you can get more information. But I'm going to show you how I use divergence. I think I'll do a separate video on hidden divergence because that's a whole different kind of category of it. And I just want to keep things simple and kind of introduce you guys to it. So basically, you guys, divergence, if you guys saw my post today, I really summarized it for you. And the gist of it is that we're seeing a downtrend, okay, or an uptrend. And our indicator, whichever indicator you're using, is telling you the opposite situation. It's telling you an opposite situation, or it's telling you the opposite trend, okay? Now, I did make a little typo in my Instagram. I meant to say lower lows versus lower highs, but I mean, really, guys, what I focus on here is that we're trending down, okay, on our chart, and our indicator is showing us that we're trending up. Okay, that's really what you need to know. That's how I use it. Now, other traders probably will tell you that, there are very specific rules that you need to follow. That's fine if it's very subjective. Currency trading is very subjective. So we all do things a little different. It doesn't make it wrong or right. It's just that we all do things a little differently. Anyway, so I am going to get into the two main types of regular divergence, okay? Now, I said that we use an indicator, right? I use the MACD. A lot of other traders will use the RSI. I like to use the MACD, okay? So we're going to use the MACD for this example, but it works pretty much the same, and we'll get into how it works now. So first, we're going to talk about bullish divergence, okay? So basically what bullish divergence is going to indicate to us is that we're going to see a bullish trend come up. Now, I like to use the daily time frame when I'm looking at divergence. I find it much more accurate than the other time or the lower time frames. So I would recommend doing daily or higher, okay? Now, another thing to point out, I don't ever enter based on divergence alone. So I still need confirmation. I still use my zones. I would need to have a zone here and all of that good stuff. So if you want to know more about like my zone to zone technique and stuff like that, you can watch my other videos. You can take my free course. I'll link it below. So I'm not going to get into any of that, but I just want to tell you right off the bat, I wouldn't blindly enter a trade because I see divergence, just to make that really clear. Okay. So the first thing we're going to talk about is bullish divergence. Okay. Bullish divergence works like this. We are on a downtrend and we're creating lower lows. Okay. So we're creating lower lows, and we look down at our MACD. Now, I don't use the histogram. I use the actual lines here. Okay. On the MACD. So everything is lining up. We're making lower lows. And then all of a sudden we start making higher lows on the MACD right here, right? You see what's happening? This would be considered a low too because it kind of pivots down a little bit. This would be considered, now, not really, this guy's out of the picture, but this would be considered, this is where our divergence happens. So on the MACD, we're creating higher lows, but on our chart, we're still creating lower lows, right? So we're trending down still versus trending up. Keep it really simple. That's all it really is, okay? That's all I pay attention to. And what this indicates, and it only makes sense, like if you break it down and you think about it, you guys, like what this is telling us, remember the MACD is indicating momentum, okay? So this change is telling us that momentum has changed, right? And it's telling us a little bit early, right? That's a good indication then that we can look for reversal. So And a lot of people did ask today, like, well, where would you start looking for reversal? Well, when your lower highs form or your higher lows form, sorry. Okay, so technically it would be around here, right? Because this is where you get that higher low. This is where you want to start looking. And again, I don't blindly enter. So this is where you want to start looking because you get your lower or your higher low. It gets confusing when basically all I'm saying, you guys, is when the trend starts changing. Like, it's really simple when you break it down like that. But yes, technically it should be lower lows here and higher lows here, right? Because that's how we determine a trend. So at this point is where I would start to look for entry. How would I look for entry? Just the same way I always do, you guys. So once I see this higher low form and I see our trend has shifted, so once this higher low forms, I'm going to start looking for entry. How? Again, I'm going to have my zones plotted. So let's just really quickly break this down. If I'm just going to blindly plot a zone, okay? And there's a method for what I'm doing here. I'll show you in a second. So what I would do, I'd already have my zones plotted because I'm a zone-to-zone trader, okay? If this lines up with and it does, okay? So this is lining up perfectly with a zone that I would have had, okay? You see that there and here. So obviously this is a support, resistance, or zone, whichever one you use. You can use support and resistance if that's what you're comfortable with. I just prefer zone, same sort of thing, key level, whatever you want to call it. Next thing I would do is, and this is, guys, is just my normal strategy, look for price action at the zone. So I'd look for rejection. I'd go to a lower time frame like the 4 hour. I'd look for rejection. Then I would look for confirmation, just like I would with anything else. All this is telling me is that at this point, when our trend starts changing and I get that higher low, I have an area to look for reversal. And this just was a textbook example, which obviously I looked for a good example, right? It's not always going to work out this perfectly. Let's look at, so that's what bullish divergence is, because we end up with a bullish trend. So that's the gist of that, okay? Now, let's chat about bearish divergence. And again, this is regular divergence. We're going to get into hidden another time. That's a whole different ball game. It's a bit more complex. And usually, you guys, to be perfectly honest with you, I don't use hidden divergence very often. If I notice it, of course, I will take it into consideration. But usually, I stick to the very simple stuff. Okay. So again, and this is an example of bearish divergence. What we're seeing here, we're making higher highs, right? Now, this is the daily chart. So we're starting down here, and let me just there we go. So we're creating higher highs. So we start, we'll just say we started here. We get a higher high. We get a higher high. Okay. I know this is technically, it probably should have started here, but anyway, we get a higher high here and a higher high here. And you guys, I just kind of grabbed a random example. You don't need to investigate everything I do to a T. I'm just trying to show you how it works. Probably this isn't the most ideal setup, but I'm just showing you a random part of the chart so that I'm not taking too long during the video. So we're creating higher highs on our chart, on our candlestick chart, right? And again, everything's going great here, but then we start creating lower highs on our MACD. See what's happening right here? So where would we look for the reversal? We'd look for the reversal when we get the lower high, which is right here, right? And if you look up here, it would have been perfect because, this did work out beautifully. And again, to really simplify it, and this might get a little messy now, but to really simplify it, okay, we're trending up, right? And our MACD starts trending down. The thing is, the reason you need to keep the higher highs and lower highs in mind is so that you have a good entry point or a good area to start looking at, okay? So once you start seeing this lower high, okay, again, and you're still creating higher highs on the chart, or prices creating higher highs on the chart, this is where you're going to look for entry. Okay, so just very basic stuff. It's really not overly complicated if you think of it. And again, think about why this works, because our momentum's changing, right? So we were trending up on the daily, and keep in mind this is the daily, so this was probably a healthy trend on the 4-hour time frame, right? We're trending up, and then all of a sudden our momentum indicator indicates that, okay, we have a really sudden change in momentum here. Well, a sudden change in momentum usually does indicate to us that we're going to see a reversal. So it really makes sense when you think about why it works. It's not some magic, trick that gives us reversal. It all makes sense when you really simplify it down to what it is. So that is it, you guys. I hope you liked this. I hope everything was really clear. I will write a little description in the description box for this one so that you guys can keep your lower lows and higher highs and all of that straight. I'm also going to create a little cheat sheet on this just for you to have, because divergence is a really good tool to use. Again, I do like using it on the daily, and I will go over hidden divergence with you guys as well. Make sure you give this a like and subscribe to my channel if you want to see more videos like this, and I'll see you guys on Monday.